Welcome back. As promised, let's focus now on the chemical space. We have the management of Bhagiradha Chemicals with us today. The company's board recently approved the issue of convertible warrants through a preferential allotment. This will aggregate to a total fundraise of 340 crore rupees, but upfront, the company gets only 25% of that 340 crore. The balance 75% comes, after 18 months. A Arvind Kumar, CEO, COO at the company, Bhagiradha Chemicals and Industries, is with us on the show now. Mr. Kumar, thank you very much for joining in. Can you tell us why you opted for the preferential route to raise money? What will you do with the initial upfront amount that you will collect?
And the 340 crores proceed, out of which 25% is going to be the upfront amount that we would be getting. And this would be utilized towards the investment into our subsidiary Bima Fine Chemicals, where we have a plant in Kadechur industrial area. We have procured about 34 acres of land in 2020, and all the proceeds would be invested into the subsidiary. And the implementation would be happening in phases. So the initial proceeds of 85 crores that we are going to get would be invested in the phase one. So we are envisioning like implementation in 3 phases consisting of 3 production blocks with each with a volume of about 1000 KL reaction volume, and this would be implemented in 3 phases. And the first phase, which would be entitling close to a 300 crores investment, the initial part of the proceeds would be going towards that.
Okay, so for the first phase, you will be requiring 85 crore rupees, and that is something that you'll get from this fundraise. I wanted to understand, would you require more investment in the other phases? What about funding those expansion plans that you have in place? By when do you expect these facilities or the subsidiary phases to come on stream, and what kind of potential do you see here?
The implementation of the second and third phase would take roughly about 3 to 4 years of time. The total investment is going to be in excess of 700 crores, and we would expect to achieve a turnover in the subsidiary of close to about 1200 crores. That is almost close to 1.5 to 1.7 times the investment that we would be making.
And the subsidiary will also be in the same business as the parent, that is pesticides and agrochemicals?
Yes, it is going to be in the same business. We will be manufacturing agrochemicals as well as agrochemical intermediates.
Okay, so in 3 to 4 years, you will be completing this project, and it will get you revenues of around 1200 crore rupees.
Yes.
Okay.
Sir, of this 340 crore, which you've planned of preferential warrants, how much will the promoters be infusing upfront and even,
Yeah, promoters are infusing about 15 crores, and everything is through the convertible warrants. So promoters are putting about 15 crores. We have institutional investors. We have other existing investors that we have, and also the employees of the company are also investing into the convertible warrants.
Okay. So you have a number of investors who will be investing in this warrant conversion. You spoke about how this fund will be used, to fund the subsidiary expansion. It will be around 700 crore rupees. Around 340 crore rupees would be via this warrant conversion. What about the rest? How will you be getting those funds? Will you be taking up some debt? Will you be looking at further fundraise maybe after 18 months once these warrants get converted?
So we have already invested to the tune of 62 crores by end of Q2, and about close to 30-35 crores we would be further investing from the cash accruals that we have in Bhagiradha Chemicals, the parent company, and the balance would be coming through term loans. So in the first phase of implementation, we would be looking at term loans in excess of 100 crores, and subsequently we would be investing through the internal accruals that we have.
Okay.
Sir, I was just looking at the investors list. While the promoters are putting in 15 crore, you also have Emerald Co. Private Limited infusing nearly 50 crore rupees, which is owned by the promoters of Graphite India. You've got Mr. Mehul Mohanka, who is the MD of Tega Industries, another listed player. investing close to about 22 crore rupees. Do you have, does the company Bhagiradha have any sort of dealings with Graphite India or Tega Industries?
We do not have any dealings with them currently, no.
For business purposes, absolutely nothing?
Yes, there is no business between these two companies.
Okay, so this investment is purely done, it's a personal investment by the management of the companies.
Yes, it's a personal investment by the management of this.
Okay, take that point. Mr. Kumar, just a clarification, this subsidiary where you will be investing the money, is it wholly owned subsidiary or there are other stakeholders in the subsidiary as well?
No, it's a wholly owned subsidiary of Bhagiradha Chemicals.
Okay, all right. Just wanted to clarify that. So you're talking about 700 crore of revenues coming in from the subsidiary. So what will that take your revenue and margin profile, say 3 to 4 years down the line once this is commissioned? What is the outlook? Because recently we are seeing some volatility in global markets. That's happening across the sector, be it agrochemicals or specialty chemicals. But once this does get commissioned, what is the outlook on margins and revenue growth?
I think we will be looking at something like 3x the times of your current turnover. So currently Bhagiradha is of 500 crores turnover in FY23, and we would be looking to target in excess of 1500 crores in next 5 years. And the margin profile is going to improve, and I think we have set the trends in FY23 where we have PAT margins of close to 10%, and we would be looking to improve it by another probably 3 to 4% going forward.
Okay, so looking good when it comes to the growth prospects and the profitability 3 to 4 years down the line as well. Just quickly, I was looking at the pricing and I wanted to understand, why is the warrant priced at 20% discount to the current market price? What is the thought process behind it? Because 18 months down the line, when it does get converted, if you're talking first up about good fundamentals, it should reflect in the stock price as well 18 months down the line. Then what is the idea behind this 20% discount to the current market price?
No, if you look at the multiples of the EBITDA that you generally people prefer in investing, probably at the current market price of 1600 rupees or 1650, I think probably that is priced too high. Maybe that will not attract much of the investment into the company if it is priced at that point, at that price currently. So we have, that is the reason we have considered probably like 1300 to 1350 would be the most ideal price for investment. And looking at the long-term prospects and growth opportunities that we have, I think this investment would be good at that price.
We leave it at that. Thank you very much for joining in. HDFC AMC's numbers, Q2 flashing for you on your screen. The profits have seen a jump of 20% on a year-on-year basis. 436.5 crore is the profit for Q2. It's lower than the Q1 number. Q1 profits were 477 crore. So year-on-year, there is a jump of 20%, but quarter-on-quarter, there is a drop in the company's profitability. I think the revenue number will also come up for you.
We'll need the yields to get a proper update on what the numbers really look like and what the analysis would be. But yes, these are the broader headline numbers. We'll get the yields and more margin-specific details here. But with that, we'll slip into a short break. Before we do that, here's some exciting news.